I'm Nicholas Bornoz of Capital Link, and I would like to welcome you to this very important and interesting panel. The title of our forum every year is the Capital Link International Shipping Forum, China. So we always bring in the international aspect, both in terms of the international business Chinese are doing, and also the business that international ship owners are doing with China. And this particular panel is going to focus exactly on the range of business that major shipping companies are conducting with China across the board, shipyards, trading, financing, and so on. I would like to turn the floor over to Benson Peretti, Executive Vice President from the Liberian Registry. I would like to thank Benson for sponsoring the panel and also for moderating it. And I would let him introduce our panelists. And just before we started the discussion, we were all saying we have all been together in Shanghai in the past. We can't wait to go back in person next year to host this event physically. So Benson, the floor is yours. And thank you to all of you for being with us.
Thank you very much, Nikos. I really appreciate the introduction and for the opportunity to be here. And good day to everybody watching. Thank you. First off, I'd like to introduce the panelists, starting with Mr. Jeff Pribor, CFO of International Seaways. We have Mr. Vikram Hiranandani, Managing Director of Scorpio Tankers and Eneti Incorporated. We have Mr. Stavros Gyftakis, CFO of Seanergy Maritime Holdings Corporation, and Mr. Christos Begleris, Co-CFO of Starbuck Carriers. My name is Benson Peretti. I'm with the Liberian Ship Registry, and it's a privilege to be able to moderate this panel today. I'm looking forward to hearing what everybody has to say, and I think it'll be very, very interesting. We all have a lot of experience in China, and as Nikos said, we wish we could be there right now. Ourselves at the registry, we have 5 offices in China and have been doing a significant amount of business there. So for us, it's a very wonderful panel to be moderating, and look forward to hearing what everybody has to say. With that, we'll move into the first question, and what we'll do is, with this first question, which will be a 2-pronged question, I'll also have the panelists give a little bit more background about themselves as well. So a quick introduction, and then into the first question. And the first question to start us off is China still a strong source of capital for many owners? And what in each segment do you see as biggest area of opportunities with yourself? So I'll start off with you, Jeff, if you don't mind giving an introduction and then diving into that question to get us started.
Sure. Thank you, Benson. I'm Jeff Prebor, the CFO of International Seaways. Our company is soon to celebrate its 5th anniversary of being an independent public company. We were originally part of a company called Overseas Shipholding Group, which is relevant to our topic, as I'll get to in a minute. But we're spun off to be independent 5 years ago, on December 1. So coming up on that anniversary. China is very important to us as we renew and grow our tanker shipping fleet, which is everything from VLCCs down to MR tankers. We currently have 92 vessels on the water. Just a few days ago, before this conference, we announced that we had entered into a new financing transaction with a major Chinese financial institution, BOCOM. I'm sure everyone knows it, for the financing of 3 Newbuildings, dual fuel LNG VLCCs to be built, or that currently being constructed in Korea for delivery in 2023 for long-term charter with Shell. We're very pleased to have this financial partnership with BOCOM. It's about $245 million in total financing, relative to just under $300 million total cost of the Newbuildings. So there you go, is a very recent demonstration of how important China is in this case, even though it's financing Korean built ships, a very key financing source for us. And equally, we have built many ships in the past through our predecessor company, OSG, in China, and we would certainly expect that we'll be building ships in China in the future. So both for financing and for new buildings, China is and will remain a very important factor for International Seaways.
Thank you, Jeff. Very, very timely. All right, Vikram, how about for you? And
Absolutely. Hello, everyone, and thank you, Benson, for moderating this panel, and Nicholas for organizing this discussion. My name is Vikram Hiranandani, and I'm responsible for arranging the debt financing at Scorpio Tankers and Eneti. Prior to joining Scorpio back in 2014, I used to be a ship finance banker at BNP. Answering your question on China, we certainly see them as a very valuable and major source of capital for our business. Back in April 2017, we did our first sale leaseback transaction in China. That was with BOCOM as well. It was for 3 MRs and reflected a financing amount of 74 million. And fast forward now in 2021, like just at Scorpio Tankers itself, we have financed around 95 tankers in the Chinese lease financing market with the exposure commitments of around 2.1 billion. So I think, just that scale itself speaks how important they are on the financing side. And even as a group, in general, we've built a lot in China. We've transacted outside of the leasing companies. We've done loans with the export credit agencies in China. So they've really helped us in, a lot of different aspects of the business. And even going forward, if we talk about Eneti, the wind turbine business, there's some very good promising opportunities in China for that market. So it is certainly quite encouraging overall, and it's a huge source of capital for our business. And even during the pandemic, what we liked that we saw in China was that more new leasing firms are coming up. And just during these difficult times, we added 2 new relationships in China on the financing side. So I'm sure that's like music to ears of any ship owner, that, it's a very viable source of capital for the business.
all right, thank you, Vikram. Very, very interesting. Stavros, how about over to you?
Sure. Hello to everybody, and thanks, Benson, for moderating, and to Nicholas and Eleni for organizing this panel. So in terms of a brief introduction, I am the Chief Financial Officer of Seanergy Maritime Holdings. We are the only US-listed pure-play Cape-size company. So we own and operate a fleet of 17 high-quality Cape-size vessels. The company is headquartered in Athens and listed on the Nasdaq Stock Exchange. Like Vikram, before Seanergy, I was also a ship financing banker with DVB Bank. Now, being a pure play Cape-size outfit, China is a natural partner of Seanergy, and that's on various sides of the business. Be it for the financing of our vessels, we have concluded we are financing three ships through sale and leasebacks with Chinese lessors. At the same time, we have developed a very wide network of local suppliers and port agents, since all our vessels call Chinese ports all the time, basically. And last but not least, China is our preferred partner for all our vessel repairs and maintenance. All our scrubber systems have been installed there. We basically do all our scheduled dry dockings there. And also recently, we have started doing installations of a package of energy efficiency devices as means to address the upcoming environmental regulations. Now, going specifically to your question, yes, China is and will continue to be a strong source of capital. The lessors have access to relatively cheap funding and an appetite to expand their business. At the same time, I would say that they have now a very good understanding of the shipping business and are willing to extend financing at very competitive and commercially reasonable terms. Over the last years, of course, based on the healthy performance of our sector and that of shipping in general, we see good activity also on the financing front, and a more competitive landscape being formed with traditional lenders returning, coming back to the market and trying to regain some market share. Nonetheless, the Chinese lessors are responding to this competitive landscape. They are further improving their terms and their pricing, and so they will maintain their market share and will be even able to increase it. Yeah, that's all there is to it on the financing front. Now, in terms of other opportunities coming from China, and again, focusing on the Capes, I mean, I would highlight some factors that are very key as to the demand for the core commodities carried in our vessels, which is coal and iron ore. I would highlight definitely the long-term shift towards renewable energy. This is an energy and steel intensive process, and it is likely to generate stable demand for coal and iron ore over the next years. For example, I'm thinking of electric cars, infrastructure development, notwithstanding the recent turmoil with Evergrande, is ongoing and unlikely to slow down. The residential property market is quite central to China's economy. Also, the country's commitment to lower carbon emissions is generating demand for high-quality iron ore imports from Brazil, with a long haul and increased ton-mile demand. Also, industrial manufacturing is generating high demand for aluminum. We've seen bauxite quickly grown to more than 5% of the Capesize trade over the past year. We expect this pace to continue. And last but not least, we should have in mind that China operates a large fleet of technologically advanced coal plants, which is likely to generate solid demand for thermal coal. So, concluding, given the slow pace of the dry bulk fleet expansion and the very healthy demand for commodities generated by China, I think that the overall environment is very supportive of improved rates for our sector.
Thank you, Stavros. It's very interesting what you say about the renewables and the demand. Thank you. Christos, and over to you.
Sure. Thank you, Benson. I'm Christos Begleris. I am Co-CFO of Starbuck. Starbuck is the owner and manager of 128 vessels. We're listed on NASDAQ. We're actually the largest US listed dry bulk company by market cap, as well as size and trading liquidity. And we have a long history of dealing with China. Essentially, it goes back, my first transaction with China was back in 2008 with China Export-Import Bank. And since then, and under the auspices of the Ocean Bulk Group, we have done more than 2 billion of financing with various Chinese institutions, starting from the Export-Import Bank of China to the Sinosure, to the leasing houses that started expanding in China from 2013 onwards. It's interesting that on the leasing space, we have managed to expand our cooperation beyond the traditional provision of financing. And with one of the major leasing houses in China, we actually went and bought together vessels on an equity JV basis. China is extremely important to us, and China remains important to us and will be important to us going forward in the future. What has not been mentioned is that China essentially in 2020 provided around 15 billion of financing to the shipping industry in a period when other traditional financing lenders were retracting. And that's extremely important because especially when freight rates go down, especially when the market is weak, you want stable financing providers to be there as partners for your business. And it was mentioned also by Vic before, there were some Chinese that were there, most of the Chinese were there, and we also saw the entrance of some new players, which very smartly came at an opportune time when others were retracting from the market. Now, going forward, China and Chinese financing has a big role to play in the shipping industry. What we have seen is that rates and essentially the cost of Chinese financing has come down this year, mainly in order to compete with European lenders. that have been entering the market in a bigger fashion, as Stavros has also mentioned. But most importantly, we believe that China has an important role to play in the future in the financing arena, as essentially in the West, we're seeing more stringent regulations about financing and more focus on ESG. So potentially there is an opportunity for financing institutions in China to finance tonnage that will soon be non-financeable from traditional Western European lenders. China has also an extremely important role to play in sort of the creation of so-called phase 3 vessels that will essentially be able to cope with the stringent rules and essentially be able to cope with zero carbon emissions. We don't have such vessels right now. We hopefully will be having vessels like this in the following few years. The biggest bottleneck is, of course, having in abundance zero carbon emitting fuels and infrastructure in order for vessels to burn. But as we will be forced to essentially establish those fuels, it will be also increasingly important for the Chinese to help with innovation, constructing those vessels, and then also financing those vessels from the Chinese financing institutions. I'll just stop there before sort of touching upon demand supply in China.
Thank you, Christos. Actually, let's keep it with you, because the way you finished it ties nicely into the question. You touched on some of the differences between the Chinese financing and other areas of finance, talking about financing the non-financeable vessels. Could you maybe start us off on the next question about explaining some of the differences or similarities that you see between, say, US, UK, European financing versus what you see in China, whether that's with sale and leaseback versus secured loan, or any of the differences you see, or maybe some of the similarities?
Sure. So we have done a lot of business with the Export-Import Bank of China, having also built a lot of vessels there. And the financing that is provided there is in the form of senior debt with mortgage security directly on the asset. And that's essentially the exact same form as the traditional European lenders that essentially provide senior debt on our vessels. Then what we have done is we have used Sinosure together with Export-Import Bank of China, and Sinosure essentially comes as an insurance provider to guarantee for our credit. For this insurance, we as Starbuck are paying a premium to Sinosure, and essentially the bank is able then to get Sinosure as a credit versus getting Starbuck as a credit, and therefore is able to provide very competitive financing terms. So we have also done some facilities where Sinosure acted as an insurance provider to transaction. Last but certainly not least, because it has grown to be the largest financing source for ship owners, is the sale and leaseback structure, whereby the Chinese lessor is essentially the owner of the vessel, and us as a shipping company are the bareboat charters of the vessel, with most of the times purchase options and the purchase guarantee at the end of the bareboat charter. This is recorded in our books as a financial lease. We have seen also in the last few years Chinese leasing houses offering operating lease products, whereby essentially there is no purchase obligation at the end of the contract. There are only purchase options throughout the period of the contract. But what we like about China is that it's always innovative. It's always there to try new structures. So as I said before, we have also tried in the past acquiring vessels on a JV basis with a traditional Chinese finance leasing provider.
Thank you. Very interesting. Jeff, how about for you and International Seaways?
Well, I would echo what Christos has to say, that we have found that deals can be structured on the financing side. And let me answer the question that way. Either similar to European lending, where it's a ship mortgage. And we had a similar transaction with Sinergy and China XM and Bank of China, who had provided financing to a company that building ships, 6 VLCCs in China that we acquired in 2018. And we're very pleased to have been able to assume that financing on our balance sheet at the time. Was very, very attractive financing for the original Newbuildings and for us to take over. And we recently paid that off because it had sort of run its course and it was time, but it was a very satisfactory arrangement with and relationship building exercise with Sinergy and the 2 other Chinese banks. So we would look at both that straight mortgage financing as an alternative for Newbuildings in the future, or as I said, we've just entered into a sale leaseback transaction, which is essentially still a loan. It's just structured where the collateral resides in an ownership fashion with the lender, so to speak. But from our perspective, it's really the same. The assets remain on the balance sheet. The debt is capitalized on the balance sheet. So it's no different, really, from our perspective than a traditional financing. So we're open to either structure and find them both to be. I agree with Christos. Business people and the institutions in China are very innovative and very practical and easy to work with. And that's one of the best parts of doing business in China.
Thank you, Jeff. Vikram, anything to add on the same question?
Just, I know Christos and Jeff shared some good points on the similarities and differences. At Scorpio, for us, timeline is of very high importance. And what we have been seeing between doing, say, like a Chinese sale leaseback transaction or one of the loans from the Western banks is that the gap between executing the transactions is reducing. It's actually getting much quicker to do a Chinese sale leaseback transaction now, and a little bit longer to do a bank loan. That is our personal experiences, where in some cases with certain institutions, it might actually be quicker to do a Chinese sale leaseback, and in some instances to do a bilateral. But at least overall, that gap has been reducing. So, we've done quite a few transactions, whether it's banks or with lessors in China, where we're talking about, the start to finish being done within a period of 3 to 4 months. If we talk a little bit about leverage and pricing, if we focus first on the sale leasebacks in China, they tend to offer higher leverage at a slightly higher price. But at the end of the day, when you look at the additional liquidity that's coming out from the transaction, it's at a very compelling cost. So we really like the source of capital a lot. And as Christos mentioned, like when you're dealing with the export credit agency, we've transacted with China XM Bank, we've transacted with Sinergy. The financing is very, very competitive, in line with, generally banks, and sometimes it can even be a little bit more competitive. We did a very good transaction with Sinergy back in 2019 to help us with the scrubber program. And we were very pleased with the terms we obtained on that particular transaction with BNP Paribas and SEB as part of it. Going to, like purchase options, financial governance, we're actually seeing China getting a lot more flexible now than where they were like 3-4 years ago. So the covenants are getting a little bit less stringent than what we typically agree with the banks. The purchase options, like a few years ago, the standard was probably like 4th anniversary. Now we're getting a lot of deals done at the 2nd anniversary. So we're seeing some really positive differences and developments in that market. And we are big users of China in terms of sourcing capital.
All right, thank you, Vikram. Stavros, anything to add from your side on the same question?
Sure. I mean, Seanergy has not been very active on the new building, no, not active at all. I mean, on the new building front, we are not believers of new buildings. So we have not dealt with export-import agencies. I mean, we have done sale and leasebacks, financings through sale and leasebacks, both financial leases and an operating lease, which we concluded recently, with the difference being mainly that the lessor basically assumes the residual risk. The first transaction we did back in the summer of 2018. We signed that term sheet for that loan in October 2017. So it took us basically 9 months, I mean, from the signing of the term sheet to basically to draw the funds. But since then, the lessors have gone a very long way. And in the recent transaction that we did in the second quarter of this year, actually with the China Merchants Bank leasing, I have to admit that the experience was nothing short of the one of a European lender. And actually, I agree with Vikram that these days they are becoming even quicker and swifter. I mean, in the execution than Europeans. So the process was concluded very, very swiftly. CMB showed a very good understanding of specific sensitivities of the transaction, and then after we concluded commercial negotiations, the legal documentation was also concluded in a very swift manner. So overall, the experience has shown that the lessors have had a very steep learning curve, and the know-how that they have developed is extremely good these days. Having said that, I don't think that the Chinese leasing is for everyone. The lessors require a corporate structure and transparency, and this is why you see more public companies or some of the larger and more corporate type of private groups utilizing this product. In terms of differences, I agree with what has been said before by Christos and Vikram and Jeffrey. I mean, it's the ownership versus the mortgage, which again, it's not really a difference. I mean, the structure overall and the way that the transactions are reflected in our books are exactly the same, even now that we did an operating lease. And if you get down to a nasty restructuring, which will result to repossession, I mean, be it through termination of the bareboat or an enforcement of the mortgage, that this is irrelevant. The damage has been done by then. Pricing is usually a bit higher than what commercial banks can offer, but it is improving. And this year, I mean, we saw steep reductions in the rates that were offered by lessors. Loan to value is usually higher, I mean, in the leasing structures. And the covenants, I mean, we found them to be very, very commercial. I mean, they were not stringent in negotiating covenants. So overall, I don't see much difference these days. And it's actually a function of execution speed, pricing, and leverage that the individual borrower wants to obtain, I mean, when selecting which product is the most suitable to finance his vessels.
Thank you, Stavros. I think you all kind of answered my next question. So I guess what I was going to ask was to see if you still thought that the outlook on China being a strong source of capital was positive. But from what I pick up from listening to everybody, it does seem, especially given like with Jeff and International Seaways with the partnership with BOCOM just recently. So I think I might just skip that next question unless anybody sees it perhaps as not continuing to be a strong source of capital, which I didn't really pick up on. So, okay, good. I guess, Stavros, to keep it with you, I'd like to get to talk into more about, new building orders, secondhand moves, sale and leaseback, and you touched on it now. For yourselves going forward, you say you're not so much focused on the new building, but still looking at the secondhand side or the sale and leaseback side. Do you see these continuing to be the sources of fleet growth for you and your company?
Yes. Now, I mean, talking specifically about Capes, there's not much new building activity. Order book is at a very low point. I mean, this has to do with the fact that upcoming environmental regulations are putting a lid on ordering. There is uncertainty surrounding the engine technology of tomorrow, the fuels of tomorrow. So owners are showing some discipline, and also I mean, the memories of the last ordering spree of 2013-14 are still fresh, and therefore owners are a bit more disciplined, which we like to see. I mean, contracting in 2020 has been the lowest since 2012. This year levels are a bit higher, but still lower than 2019 and 2018. In the last 20 years, average contracting has been about 20 million tons per year, if I'm not mistaken. 2021 contracting is about 14 million tons, which is, I would say, on the low side. The order book for the larger bulkers is about 70% of the fleet, while vessels built before 2008, it's about 14%. So 7% versus 40%. Ordering is mainly tied to renewal rather than speculation and expansion. And also in terms of return on investment, second-hand vessel acquisitions make more sense than new buildings right now. Nonetheless, when evaluating opportunities in the second-hand market, we are very careful with the potential implications of the upcoming environmental regulations that will affect the speed and the competitiveness of any acquisition. So it's important to incorporate these factors in our investment decisions. So, I mean, we support basically further growth through second-hand acquisitions. The rates, the FFA curve is heavily backward dated. So a new building project, you cannot find an adequately attractive long-term time charter to justify. Whereas talking second-hand, I mean, returns are much higher and immediate. So we would go for that.
All right, thank you. Vikram, how does that contrast for, say, on the tanker side, if at all?
So on the tanker side, it's been a while because we are, on Scorpio tankers, we have 131 ships. And the most recent acquisition we've done out there was back in 2019, when we worked with Trafigura on their product tankers. There were 15 MRs and 4 LR2s, where the 4 LR2s were from China. But so we got those ships in 2019. And then since then, most of our work in China has been like the scrubber installation program, which has been a very big program for us. So that work is all being done in China. And that just goes back to one of the points we made back in 2019 about, getting a financing in place through Sinoshow to help us out with that program. So we've been doing a lot of work that way in China with different yards. And right now we are we are content with our fleet size. We continue to transact a lot with China on the financing side. And that's where we stand right now, but it's just a big market, whether we look at it from shipbuilding or in terms of product demand or even in terms of financing. So it's very, very significant and important to us.
Thank you, Vikram. Christos, how about for your portion of the bulk space? Stavros touched on the Capes, but what about the other sizes within that sector?
Well, just to mention something that applies actually to all sectors, in that we have been unfortunate not to be owning container vessels, but at the same time, we have been fortunate because container operators and owners have been filling yards in China and in Korea with orders, which essentially makes it almost impossible for us, poor dry bulk and tanker owners and operators, to take delivery of new vessels if we order them now before the second half of 2023 or 2024. And that's important because it essentially guarantees a period of very low deliveries across the dry bulk fleet, because Starbuck operates across all 3 segments. The net, the order book right now is to the tune of 7%, and it has been as low as 5.8% at the beginning of 2021. So we saw a moderate level of ordering, but still at very low historical levels. Essentially, what we have is a net fleet growth for the next years, capped for 2022 and 2023 at approximately 2% per year, which means that should ton miles in our industry grow by more than 2% per year, then we're going to have even tighter freight markets than what we see today. Therefore, overall, we remain quite optimistic about the long-term outlook. We have seen some tightness and volatility towards sort of more negative freight markets lately. And that has been a result mainly of China essentially stopping to import all major commodities in the dry bulk industry, whether steel, coal, and well, it's not a grain season, so they will not import right now grain season. But as we move past February 2022, when there are the Winter Olympics in Beijing, and therefore when clear skies will be as important as ever for China, we think that China is going to start again importing at more normalized levels, and we therefore expect dry bulk markets to also normalize at much higher freight rates than what we see today.
Thank you. That was a very good point you made about the Olympics too. I remember that seems to be every time there's a big event, we get the clear skies, so that it does impact shipping greatly. Jeff, how about from your side? Anything further to add to this point on fleet expansion?
Well, first, it's maybe not a fleet expansion, but I just want to underscore Christos's last point that you also agree with about the effect of China's current policies as it goes into the Olympics. You know, on the oil side, we're all very pleased to say that overall demand is back to approximately, or certainly will be by the end of this quarter, the 2019 level, annualized level of 100 million barrels a day. But with seasonality, I normally would have expected that if 100 million barrels was the annual average for 2019, the Q4 would have been probably a little higher. And we would be higher still in this recovery, except for the zero tolerance COVID lockdown program in China and preparation for the Olympics, which have definitely reduced consumption of all commodities and certainly restrict mobility. You know, there's not as much flying domestically in China as there normally would be because of this policy. So we think that's a very interesting factor, is that once we get past, things are already good for us in terms of demand returning, inventories right sizing, which is the only thing in between the tanker market and good rates. Is demand is back, inventories are almost back. And so when you add in extra demand from the winter and then extra demand from China, increasing mobility after the Olympics, it's very exciting for the end of Q1 and the rest of 2022. Quickly on the new building side, I think it's very exciting that there's been a change. I don't know if it's forever, but what I mean by what I'm excited about is that typically, at least in oil tankers, it may be true in dry bulk too, that owners have built vessels completely on spec, place an order for a VLCC and hope for a charter, or just put it on spot and hope for good results and make that a sensible financial investment. I think this is not the smartest strategy for companies that are much, much smaller than their customers. And I've always thought that collaboration was the way forward. And I'm pleased that whether it's our deal with Shell or other deals that are being done now, we're seeing more collaboration with major customers, whether they're oil majors or national oil companies, et cetera. And it's not because all of a sudden everyone got smart. I think it's because the technology is changing, and it doesn't make sense to order vessels on spec with old propulsion technology. And while it does make sense to order dual fuel, they're 15% more expensive. So it's risky to build them on spec. So the way forward is working with customers in a collaborative way to provide a baseline charter, so that the new building comes with employment built in. And so I think we're going to see more of that in the future.
Yeah, thanks, Jeff. That's a great point, and it ties into the next question on the regulatory changes, the push towards decarbonization. I guess if I could ask you, in dealing with some, you talked about getting the partners and with the oil majors, for example, like you did with Shell. Is the push towards decarbonization becoming a large factor in these discussions and pushes towards as you go towards the fleet expansion and growth, that being a basis for the kind of vessel you're going to build, the technology behind it? And can China be there to build those types of vessels that you think will be needed going forward in the future?
Well, look, everybody on this panel and everyone responsible in shipping is working on plans to get their fleet more efficient, in terms of all greenhouse emissions. CO2, it gets the most headlines, but everything is on the table. We're all working on that, I'm sure. So what we're doing is evaluating the vessels that we have now for, how they'll grade out in 2023 on a carbon intensity index basis, and which of those vessels will require retrofitting between now and 2023, which might be in China, and putting in devices, newest ducts, or ultra slick paint, or other capex that we can spend on some of the older vessels to improve their grade and make them more efficient, and also therefore more attractive to our customers. And maybe some of those vessels, that investment is not worthwhile because it won't be sufficient to get them where they would need to be. And so we'll have a different strategy with those vessels. And then for the Newbuildings, which we already discussed, we think that our customers are driving towards gas as an interim solution. It's not the ultimate solution, but ammonia or methanol, it's fine if you're American, where you're going to source it. But for the rest of us, all these other alternative fuels, it's a little too soon to be allocating our capital today. We're allocating our human capital to spend time to understand where the future is going to be. But for us, the near term is going to be gas. And we're very comfortable that China will be there with us in terms of they're already building dual fuel LNG, the capabilities there. So we're quite comfortable that China will be a good partner for us as we go into this new decarbonization phase.
All right. Thanks, Jeff. Appreciate it. Vikram, how about you? The upcoming regulatory changes and the push towards decarbonization as well.
So as you know, at Eneti, we concluded the sale of our entire dry bulk fleet. That happened by the summer. And now we are fully engaged in marine-based renewable energy business, specifically installing wind turbines. So this by itself is like a significant green shift, and we are committing to meeting global climate goals. We placed an order at Eneti back in May, a new shipbuilding order for a wind turbine installation vessel. And talking about investing in technologies, that vessel would be ammonia ready. So that was the spec as well for the ship. At Scorpio Tankers, our fleet is young. The average age is 5.8 years, and they are of eco-design specs. So basically, the investment we've made over the years in such modern vessels, they position us quite well to meet the current and even the predicted future emission regulations. And then, as Jeff said, it's not only about greenhouse gas obligations that everybody is working towards meeting their obligations, but they are even working on satisfying like other emission requirements, whether that is sulfur dioxide or nitrous oxide or particulate matter. So we're spending a lot of time and completely committed on outperforming these requirements. And then back in August, at Scorpio Tankers, we acquired a minority interest in a portfolio of 9 product tankers. And these are, 5 of them are MR methanol tankers. So they basically carry methanol. They carry traditional petroleum products, but they're powered by methanol or traditional marine oils, but it's a new technology that we've invested in on the tanker side as well.
Very good. Thank you. Stavros, for yourself and especially in the Capes, you say there's a low order book for the Capes. What do you see as some strategies ahead to meet the demands and the new changing regulations?
Sure. Now, at Seanergy, I mean, we have been maybe among the first, and we continue to be a very strong advocate of the improvement of the energy efficiency of the existing fleet, and mostly in cooperation with our charterers, the end users of the vessels, as means to serve them in an environmentally efficient manner. Now, in this regard, we have cooperated with major charterers such as Cargill, Uniper, and we're now discussing similar projects with other, even Japanese charterers on a number of vessel upgrade programs, installing energy-saving devices such as newest ducts, propeller post-cap fins, and what have you, which have a tangible benefit on the emission front. And we have also, since many years, installed advanced AI monitoring systems on all our ships, which allow us to monitor their performance on a real-time basis and intervene, leveraging telemetry for voyage planning, route optimization, proactive treatment of the hull. These days, we're also testing biofuel blends, again, in cooperation with major charterers. And we do believe that this will be one of the most efficient ways to transit into a greener future for shipping. Now, new buildings, as discussed before, we are not considering. We think that the far safer bet for the industry is to make the existing vessels more efficient, to invest on greener fuels compatible with the existing engine technology, and then extend the economic life of the existing fleet as much as possible. This will allow us to transit basically smoothly into greener engine technologies once these are available. So for the time being, I mean, I think that, as Vikram said before, I mean, investing on research, investing on our human capital, I mean, in understanding what the implications would be and what would be the best way to approach the upcoming regulation is key, instead of overly spending, I mean, on technologies which have not been tested and may prove obsolete, I mean, in 3 or 5 years from now.
It's a great point you make about human capital. I think that that's also going to be one of the challenges. It doesn't get talked a lot about right now, but training the crew on these new systems and these new technologies is going to be just as important as having them on board and whether they meet the goals, because if you can't operate the ship safely, what's the point? But you probably host a whole panel on that. So Christos, anything to add to the same subject as I think we're winding down on time here, but if you want to touch on this one and then take us home.
So yeah, very briefly, ESG is at the very top of our agenda right now. We recently published our third Starbuck ESG report. The first one was 3 years ago. And this year, basically all our disclosures in terms of emissions, as well as data, were actually assured by EY, by one of the big four. We are also signatories in the call to action for shipping carbonization. We are also sponsors of the Green Corridors project that played also a big role in the CAP 26. We have recently participated in the drafting of Poseidon principles for marine insurance framework, which essentially will regulate marine insurance in the years to come. And we are supporters in various projects across the ESG sort of spectrum. For example, we are working together with MIN on the development of an ammonia engine. We are not supporters of dual fuel vessels, as Jeff mentioned. We believe that essentially the well-to-wake emissions of LNG is very similar to the well-to-wake emissions of traditional fuels. And we are monitoring very closely the space in order for us to essentially be ready to invest in third generation vessels that will emit zero carbons.
All right. Thank you, Christos. Very good. This brings us to the end of our panel. It's been 50 minutes now. I want to thank everybody, Jeff, Vikram, Stavros, Christos. It's been very interesting for me. I'm sure for the audience as well. Enjoyed the discussion very much and all your inputs. So give you all the opportunity to say your goodbyes and thank yous. And on behalf of me, thank you again for the wonderful discussion.
Thank you,
you all.
everyone. And likewise to what Mr. Nicholas said earlier, it would be great. Hopefully next time we could have this in person, but it was a very good session. So thank you.
Thank you to everybody, indeed. We look forward to being together in Shanghai next year. And thank you to all of you.
Thank you very much.
Thank you.
Thank you.